Hey guys, welcome to the newsletter. I've got a great video for you today. We did a trade. This is a trade recap from a trade we did on Friday in the main room. If you were in there, then you got that trade. If you were not, try to make it in the room. And we always look for these kind of trades. So I'll show you. We're going to start here with this is today, the ES. We just had a lot of chopping going on today. This trade was again, this was in the SPX, so I'll pull an SPX chart over here. And interestingly, on the high on the day today was 7773. This is Monday. I'm recording this on the 10th on Monday. The high on Friday was 7763. So we're literally 10 points the high under what we did today. But that kind of set up the trade because we were, at the time I did the trade, we were down here and we had been coming down, coming down. I had some support level here, support level here, support level here, a lot of support under this fib levels, etc. And I was looking for this thing to bounce into the close. I did this at about, there was about 1 hour left in the day. And so I'm looking at this and I'm targeting the expected moves said that we would get back. At that point, we were at, it was right down here on SPX 77.35. Our expected move was like 15 points. It got us to 77.50, right? And that made sense. We'd get to 77.50. And I was looking at this and I was going, well, we can put a butterfly at 77.50. That gives you probably the most bang for the buck on the trade, right? But I'm looking at this and going, okay, well, this is a high on the day, and the way this market has been moving, just kind of violently up and down, I said there's a pretty decent chance we might overshoot the 77.50 level here. So that makes me a little nervous because the high on the day was 77.63, which is over here. And I'm like, the worst thing to do is when you have a trade and you're right, you're bullish, you're buying the dip, you're thinking this thing's going to bounce, and you're right, but you overshoot the trade and you still don't make anything, right? That's the worst. But so I ran the numbers and I did some quick, easy math, and I said it makes more sense if we do a call debit spread. That way we won't overshoot it on the upper end if we just keep going. So that's what we did. So let me show you the trade here. Pull that over. We started. Okay. Well, first, I have a really cool toss tip. I always like to give tips and tricks on anything we do, anything that can help you, right? So this is the trade, right? But as you notice, excuse me, that was on Friday, 7 August, right? That option is no longer there. So the tip is don't X out of these if you want to reference this again if you don't remember the price or whatever you did in the trade. As long as you don't close those, you can take this, and I'm just going to duplicate it here just to have a comparison. And I'm going to change this to, I'm just going to go to today. Today's the 10th. Well, that option is still valid, and this price populates with the value that is here. I didn't type that in. It retains that information under that strike. So we did a simple call debit spread. Now, again, remember we were way down here at 77.35 kind of roughly when we did the trade. So, we were going to go to 77.50, and I wanted to include 77.50 in here. But again, I thought we might overshoot it and get up to 63, the high on the day. So we did the debit spread. We paid 95 cents for this. It immediately, we put, let me pull this back over. So, hold on, let me grab this. So we put the trade on, again, it was about right here or here. It was right at the very bottom of this, and we put the trade on and immediately started going up, and I'm like, man, this is great. We only paid 95 cents for this. Now, when I price these things or when I post these things in the room, I don't know what size account people are trading. If you're trading a $5,000 account or $500,000 account or $5 million account, I don't know. So I always price this in small numbers. This one you can see down here, I did 3 contracts right here. 3 contracts at 95 cents. Let's just say $1. So you got $300 of risk here, right there. And your max profit is $1,200. So to risk 300 to make 1,200, pretty good, right? So I like the trade. Put it on, it immediately starts going up, and I'm looking at this, and it had just, again, it just really, we caught it perfectly. It was really, good timing. And the levels told me to do that, right? So put that on, it started going up, and I noticed, again, I posted this live in two different rooms, two different trading rooms. So I noticed people were selling it, closing it, which is fine. High five, that's great. But I said, you know what? Let's do this. We had less than an hour to go in the market, so I'm going to do this. So I said, let's go in. I'm going to move this to 10. I said, let's go in and sell the other side. So we have a call debit spread on one side. We have a call credit spread on the other side, right? We bought that for 95 cents. We sold it for $1. So we completely covered our costs. We have no risk on the trade, right? Can't lose money on this thing either way. And so we held it. It came into the center of the trade. This was 10 minutes before the close of the day. I'm on Eastern time. So 10 minutes before the close of the day, we're sitting right here. Again, $300 trade, and we're up 1,100 bucks. Pretty good, high five. But remember, we added this for more profit. So we hold it into the end of the day at 4 o'clock. It's worth $1,500, right? On $300 with literally no risk up and no risk down. That's the way to do it. And we simply legged into the trade. We bought one side and then we added the other side. That's it. Might look complicated if you've never done that, but that's what we did, and it worked. So I wanted to share that. That was a really cool trade. Again, this is a screenshot of when I did it on Friday. So if you like that, let me know. I have a live trading room. We do this stuff all the time. We'll put a link down here in the bottom for you, and feel free to ask questions or whatever. There's a lot of things we can do with this type trade. We can do different numbers of contracts on. You can sell more than you bought, or sell less. You could, one last thing, if we're still afraid of overshooting this, we can just, if we say, for example, we did 10 contracts here, we could do 5, only sell 5 here, and you still can overshoot and you still make money up here, right? Maybe you don't cover all your cost, but that's okay. You reduced it, right? So again, lots of flexibility. I like doing these kind of trades. I try to find them all the time. So let me know if you have any questions. And with that, I will see you at the next update. Thanks. Take care.